You can't have taken all that money from people though and just go, see you later. You no longer get it.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves a risk.
And we are back with another edition of the Daily Dots. And I am joined as always by the Brain Trust himself, Mr. Chase Taylor. Here we are. We still got 6 minutes to the close here, Chase. But why don't you give us a bit of a rundown on what we saw today?
Yeah, with 5 minutes to go, we're flat. So S&P is up 0.08, although NASDAQ 100 up 0.32. Small caps up about 0.2 with equal weight down about 0.2. Mag 7 up over 1. Rest of the world's down about 0.1. You have oil down about 1%. Precious metals all down kind of 0.6 to 1.4%. Dollar up 0.2. And then rates kind of a big story after yesterday's significant pop. You have the two-year down 3 basis points and the 10-year down 6 basis points. So a decent rally from duration, although the 30 years down 4, so a little less helpful there. We actually had data for once today. Home prices or home sales, I should say, not good, which isn't very, very surprising given where rates are. And the big news overnight was the reconciliation bill passed the House. So now it moves on to the Senate, where it's likely to face some changes, and far from over there. But notable thing from the bill that did pass the House is all the medicine, all the vegetables are kind of later. Some starts a little bit starts next year. A lot starts right about the time President Trump's term ends, which is another way of saying all the vegetables are going to get pushed off to the end and then probably pushed off into the trash.
Well, I've long thought, when you're dealing with budgetary issues like this and debt and all that kind of stuff, very seldom are you going to come to a resolution that is the most optimal for dealing with those types of issues, right? You're going to come with a resolution that is the least onerous over a long period of time. And I've long believed that the only politically viable way to address the current fiscal situation, the debt overhang, all that other kind of deficit spending, is to try to freeze spending or hold it below the inflation rate, right? And cut into future spending. It just, it was kind of like you and I were talking about the whole Chinese thing. If you're looking at the two economies, I think that I think there's a lot of evidence to back this up. I think if you're looking at the two economies, we could quote unquote win in a trade war, but that's not at all the full reality of the picture, right? Like we've talked about, because then you examine, and we've talked about this in the show before, but then you examine political will is a big part of those things, right? And that's where almost regardless of which party is in power in the U.S., right? I don't think the voting populace will tolerate the ramifications of meaningful spending cuts.
Right. And that's why we're still not there. We're not going to get them. And that's why, you put them in the bill for like, oh, these start in 3 years, 4 years, like, because we all know that turns into like, oh my gosh, we have the Medicaid cliff coming. And then Congress at the last minute punts the Medicaid cliff another 3 or 4 years. You're just not going to see some of these savings ever happen. Meanwhile, the tax cuts, those start tomorrow. Like the candy you can have now, you can eat your vegetables, in 3 years. I think we all kind of know the way that will end up most likely going. But at the same time, it'll be interesting to see what happens in the Senate. My assumption is they make it even worse. While there's a couple senators that want more cuts, I think the reality is more senators are going to want less cuts. And my guess is they send it back the Freedom Caucus goes from having to swallow something they didn't like to having to swallow something they really don't like, but they probably will.
Yeah. Another thing I noticed, I've been seeing a lot of posts, and I put something out on Twitter today. I've seen a lot of people like totally dogging and dunking on this whole like sell America. Oh, it's just nonsense. No one's leaving. And I reposted one of those tweets today from Eric Palchunas, and I sat there and I went, so the sell America is fake news. Meanwhile, the U.S. is 36 out of the top 40 performing stock markets of the world. They're flat on the year, where several other are 20, 30, 40% up. And I'm sitting there going, I would say the sell America and buy international indexes is working actually very well this year.
Yeah, and to me, interestingly, it's even worked from the bottom of the U.S. market. Like that part seems shocking, but a lot of the world has even outperformed the U.S. since we kind of gave up on the big tariffs. So now, as we talked about with Kevin the other day and stuff like, and I have turned into a dead horse and proceeded to hammer, but this bill showing that just kidding on the trade or on the budget deficit, like that definitely, in my opinion, will dramatically slow down what would have been, I think, significant rest of world outperformance over the next few years. It makes it a much muddier picture, because we're going to have 7% deficits continuing, and it's just stimulative.
Yeah. But even that at a certain point, right, gets kind of baked into the cake.
Yeah, so this is a fun debate, I think. A good debate is that. But what matters between the is it just that impulse from like year over year? You know what I mean? Like or is like the actual amount? To me, I think the actual amount is more important than a lot of people think, because it's literally new money.
Right. I agree with that. I also think an important ratio would be government spending as a percentage of GDP.
Yeah, which is blown out.
Oh, it has blown out. Okay.
So yeah,
and the reason why I say that is because government spending, it's it's like a train, right? It doesn't. There's very little volatility to it. You can bet on it continuing to rise into the future. So the bigger percentage of any economy that is government spending, the less susceptible I would think that economy would be to quote unquote recessions.
Right.
Bottom line, just right. More of the inputs of that GDP is unnatural or non-economic because it's coming from a government entity.
Right. Makes you more fragile if you need the sugar daddy to do the work. But at the same time, as long as the sugar daddy does the work, like, you're fine. It's a weird like mirror image of risk in a way.
I'm looking at the bond market going, I don't think that's an option.
It's less and less an option, but at the same time, like they do have levers they can pull. They can just, quietly tell the banks, like, hey, you guys are going to buy it. Like, if you don't buy it, like, you're going to get some weird audit you didn't expect. Like, sorry. You know what I mean?
Yeah. Here's the weird thing, man. The weird thing about this is not out and out recession, but a little bit higher unemployment and a stock market that's 20 to 25% lower than it currently is. I think that's way more helpful to the administration than continuing to push this thing up.
Well, and importantly, the distributional aspects of this, like, I mean, this legislation absolutely benefits the top and hurts the bottom. Like, I don't care what anyone says. That's what's in the bill.
How do you get there with when you're looking at the no taxes on tips, no taxes on Social Security? How does
that's a totally fair point. And to your point, I'll even include the child tax credit. That's helpful.
Those seem very much aimed at the middle to lower income.
But when I say low, I mean like probably the bottom though. The changes to Medicaid, SNAP, things like that are absolutely going to negatively impact people at the bottom. And then clearly the tax cuts skew to help, the wealthy the most. Like, it's just the math. But.
Well, and this is the tough part about cutting government spending, right? Like, this is the rub, which is everybody's all about reducing the budget deficits until it hits them, right? And it's the thing that they're going to use it as a political football, but nobody wants to face the reality. Guys, if you are serious about dealing with deficits and debt, there is absolutely no way to rectify that situation unless you address entitlements.
Right. No, there's no doubt about that.
And when you do that, there will be vulnerable people that feel that pain.
But you could be more targeted with it to make sure the distributional payments, skew away from your base and towards the top. And I think they've taken too much aim at their own base with the legislation.
You know what? One of the things I think they should do, I think they should toy with, and I haven't played with the numbers, so I've got no idea what this looks like. But at some point, I have a very hard time seeing Social Security not being means tested at some point.
Right. There's a perfect example for what I mean. Like,
okay, but
I know how third rail it is now, but
well, it is. But the other issue with that is that people paid into that. You know what I mean? Like, you paid into that. You did, like, you and I have been paying into it. We did our part. So I almost feel like in order to do that, you need to offer something in exchange. I think they should start looking at the curtailment or limiting or capping of certain, like, if you're going to go down that road, and I don't really see any way around it. Well, I wonder what it would look like if you cap taxes or gave some income tax or capital gains tax relief for the people that, got X'd out of Social Security for being means tested. Like, and obviously you'd look at it in just income groups, right?
Or to me, like, you could just, how we have the cost of living adjustment in it. I mean, we're going to have high inflation to address the debt to begin with. One of the things you could do is be like, look, if you're above a certain income level,
no COLAs.
You don't get a COLA increase that year. Every year that you're above blank, no COLA increase for you, or something like that.
Yeah.
Or like every year in your past that you were above blank percent or whatever, like, we don't apply the COLA to you. So you just, inflation devals your benefits if you're rich.
Or if you get means tested for Social Security and you get X'd out, maybe do something like whatever the amount you would have gotten, you're able to deduct that from your income taxes that year.
But then again, you're just getting deficit neutral and you're not fixing anything. You know what I mean?
Well, yeah, but not necessarily, because you're getting rid of the liability of Social Security, right? You're not. That's not limiting the government's ability to make taxes or to generate tax revenue. Meaning, if for instance, let's say I'm 63, retirement age, right? Let's say I'm making $400,000 a year, and maybe they put that cutoff for Social Security at like 350,000, or they probably wouldn't do it. I would think it probably net worth based would be the most sensible way.
But hard. Yeah. It's hard to do.
It is hard to do. That's a very tricky deal. But let's say you did that and you said, okay, look, here's the deal. We're going to means test this out, but in exchange for that, you can deduct that amount off your income taxes. Right. Well, think about it. That deduction, let's say your benefits were 60 grand. Okay. You're most people in retirement, let's say you're paying 25% on that, right? So 15. So you save 15 grand as opposed to the government paying you out $60,000 in Social Security payments. Right. And then also, like I said, on top of that, yeah. So he's writing off that 60,000, right? But maybe his other stuff does well that year and his actually personal income goes up. Meaning that guy could end up generating more tax revenue for the government. Anyway, it wouldn't just be deficit neutral. But my point is that I think there would be legal challenges to some of this, because how do you X people out of something that you have been, you're effectively entered a contract with everybody that
not at all though.
That's not how the legislation is written.
All I'm saying is
you can't have taken all that money from people though and just go, see you later. You no longer get it.
I mean, statutorily you can, because it's just general obligation stuff. There is no, there's no actual agreement that, hey, you paid into this, we'll give it back. It's more like, this is just a tax. And if we decide to give it back to you in some form or fashion, we will. And if not, we don't have to. Now, politically, yeah, problem, right? But not if you target it. If you are like, look, if you're above blank income level that 97% of people agree is enough, high enough, no one's going to care. That's the thing about going after the highest tiers. Like, most voters won't care. Now, you can't do that purely with like income, because people will leave. But like, if you go after Warren Buffett's Social Security checks, is he going to like move or something? No, right?
No, well, I mean,
if you try to do tax his unrealized capital gains, might he move? Like, yeah, maybe. But
it's a very, very complicated situation, and there is no painless way out at all, right? I mean, it's you got to pick your
at
poison.
the moment, we're all voting for inflation. We're going to get it. Like, so we've made our choices, and our representatives are doing it for us.
There's no sense reordering history, crying about spilt milk or anything like that. But I wish we could go back in time and listen to some of the debates about privatizing Social Security, if I remember correctly, that happened in the early 2000s. And first of all, think about what that would have looked like, right? Like, so maybe there was an automatic, with the money that you were taking in for Social Security, maybe there was an automatic allocation to like half the SPOOs, half treasuries, something like that. The sad part about that is, had you done that 20 years ago, the
S&P would probably be 15,000 though.
Well, it might be, but had you done that 15 or 20, 25, 30 years ago, well, not even that. Yeah. 20, 25 years ago. First of all, you'd have massively bigger or Social Security benefits for people that did that. Just you make way more off that. Like I've told you before about the research project we did. If the government just took Social Security deposits and put them in U.S. government bonds, it would double the average over the entire time they work. Right? They would end just in U.S. government bonds. They would end with twice the benefit that they would have from Social Security. And the pernicious part of that, or the crazy part about that, is that both are general obligation debts of the government, right? So I mean, it's
weird because your assets are your liabilities, and your liabilities are your assets in that environment. So,
yeah, no, but I'm just saying. I remember the pushback was, "Oh, you're gonna ruin people's debt," and you're like, guys, over 40 years, the market is gonna go up, right? Like, just even if it's just via inflation, like we've seen.
Maybe just betting on nominal GDP at the end of the day.
Yeah. And what it would have made the future deficits look so much better. What is Social Security spending at right now? Do you know?
Now look, it's a lot that I do know.
Well, and it's ramping.
Yeah,
right?
and that's the hard part is that
people are living longer and massive amounts of people are retiring every day. Like it's the baby boomers, man. I mean, it's they
voted themselves a lot of goodies, and they're going to take them.
Yep. Yep. Yeah. They, man, that's a mess. And that's the other problem with government spending is it's not just as easy as cutting, right? Just because not in my backyard, man. What do you see?
Whew. Projected outlays for Social Security in fiscal 25 is $1.62 trillion.
Whoa!
That's a lot of money.
Whoa!
I thought it was gonna be like 400 billion in my head.
Social Security payments make up almost 25% of the government's budget.
Oh yeah, and you throw in like basically the government's budget is that Medicare, Medicaid, and the Pentagon. That's basically it. The rest is all like rounding errors. Which is why when everyone got fired up on Doge, it's just like okay. Like I did the math in the one piece I wrote where you could just take all discretionary spending to zero. Like all of it's gone. All these little agencies and stuff, like just they're gone. Like we just have basically entitlements and defense stuff, and you still run a deficit. Like you're still in a deficit if you take the rest of the government to zero.
And you leave
And now,
And
unfortunately,
you leave Pentagon, Medicare, and Social
and
Security.
interest.
And interest.
Interest costs are over $1 trillion themselves. So, or not over $1 trillion yet, but I think heading there. Which is, as fast as we're adding to the deficit, that that is becoming a self-reinforcing loop of interest expense, which is that's when you get into the fiscal dominance where your central bank just has to become, just a total lackey and do whatever the Treasury needs it to do. We're not on that yet, but we clearly are heading to that. And whenever you have these days where the bond market backs up 12 bips, like you could just feel like, oof, like that's not that far away. We talked about yesterday, like the Fed may have to come in and do something, or we may have to, basically shove it all down the bank's throats or whatever.
You know what? I don't have I don't, well, for the listeners too, take this with a grain of salt. Because when I feel like this, I'm typically concerned about downside here. But the one thing, the one thing about this market that's a bit of a head scratcher right now, where there's a lot of things. This just feels like and I can see arguments for both sides. I mean, I could see arguments for why people think equities are going to rip a lot higher.
Yeah.
I can see total arguments for why people think they're going to get smacked down by 30 or 40%. All I know is where we're sitting right now seems extraordinary, unsustainable. Right? Like, I feel like increasingly irresponsible decisions could definitely be made, which could drive equity prices wildly higher.
Right. Just pure debasement based.
Yeah. I mean, the
expansion.
And this market just feels very, very unhinged and very out of control. And like I said, I don't say that saying, hey, you're going to break one way or the other. This just feels like it was like that text I sent you last night where I just feel they're just, I mean, you've got people whistling past serious generational issues that we're facing here on an economic basis. And when people hear you say that, I'm not laying that at the feet of this administration. This has been a problem that's been building for 50 years. I mean, you make the argument it's the inception of Social Security. Now we've added on to it, made it worse and all that kind of stuff. But, I mean, for instance, the advent of Social Security.
I mean, the whole Great Society and everything that came along with that. And before that, the New Deal. Like, I mean, that's when we went from the government being like two dudes and a horse to being enormous.
Yeah.
That's why, like, when people throw back, they're like, oh, we used to pay for everything in tariffs. I'm like, right. And government spending was like 2% of GDP.
Right.
Now it's like 23% of GDP. So like,
yeah. I thought it was higher than that. I thought it was like 30.
I know, like, for the most part, it's stuck at.
Well, I mean, you got GDP running at what, 28 trillion? Government budget, 6.5 trillion. So, I mean, yeah, I guess you're right.
No, you're right. I think I'm thinking of it. The revenue is in the 20s.
Oh yeah. Okay. That
so
makes sense.
Projections for 2025. Man, that's a lot. Is like high 37s.
Oh, sweet Moses.
Oh, never mind. That's total government. All right. So if considering only federal government spending, you're looking at 23. So
okay.
Historically, you were at a little above 21 on average, and almost all the time you're just usually around that 21 level. I think it was the COVID blowout where you went up to 23, and we just have kept it there. And like revenues, I think is like 17 is where it's like always at.
The other thing you got to pay attention to is state spending, because that's just gone berserk.
Yeah, that's where you get to the 34.
Yeah,
when you add in,
it's gone berserk. Like here in Washington State, I mean, we looked that up.
It's about to go unberserk.
What was it? It was, what did we find out, that the Washington State budget is like doubled in the last 13 years or something like that?
Something like that.
Yeah, just insanity.
And but I mean, we've debased a lot in that time.
Well, I know, but you also saw state spending ramp up drastically in COVID, and they're trying to keep it. Like they're trying to maintain it.
Same as the feds, right?
It's
and,
just
and everybody. I mean,
it's just lunacy to me.
Everyone just rebaselined to like, oh, this is normal. This is fine. You know what I mean?
What are the we got to close it up here pretty quick, but what are the big risks you see out there that nobody's talking about? And there are people, what do you mean nobody's talking about it? Like the I guess the one thing that creeps me out is you don't have a full-fledged crisis on your hand or anything. Like, I'm not saying that. Okay, but you're bumping up against something that everybody knew was coming for like the last 50 years, right? We're starting, I'm not saying we're at the end of the road. Like you said, there's more levers that can be pulled, but we can see it from here.
To your, like the point you just made though, like the fact that these take that long is why no one pays attention.
I know, but you're sitting there going,
the best opportunities are from the slowest moving trends.
Yes.
They're the toughest too, because you don't know when it actually catalyzes.
Yeah.
Like we're talking about the debt, right? Like, I mean, one of the great presentations I've ever seen is Stephanie Kelton's MMT one about showing all the cartoons about the scary debt level when it was like $1 billion.
Yeah.
You know, and like, oh my God, $100 billion in national debt. We're all going to die.
Yep. I remember.
So like to that point, like, you know, you could have made the same argument, obviously less forcefully, but you could have made the same argument every year that I've been alive, and people did. You can find a magazine cover for basically every year about the debt's about to.
Oh no, I totally agree with you. But now you're seeing markets dealing with this issue, right? Now you're seeing what looks like bumping up against constraints.
Right. The bond yield part. Even there, I think the reality is, if I felt like they were out of options to do something about yields, I would be way more concerned. But they're not. Like, there are so many corners and crevices they can shove bonds for now. I mean, obviously to include the Fed's balance sheet. But still, like, what worries me is that we do something like that, like an obvious like pressure relief valve on treasuries, but there's a knock-on effect that's bigger than they thought, where like currency gets bad enough to where so like Taiwan has like the biggest net international investment position in the world, positive one. They own like 150% of GDP in government bonds from other countries. So like if they had to get out of treasuries and do it quickly, and it started a bit of a, you know, a steamroller, like everyone like rushing for the exits type thing, like stuff like that's scary. Like, and like getting disorderly is what's scary. Obviously the Fed can step in along the way and make things better, but the leverage in all of these different things that have built on themselves for a generation or two or three, like, that's big. I mean, that's why like you have small cycles inside of a big cycle, and we are no question at the end of a big cycle. And there's a lot of stuff that gets taken for granted at the end of big cycles that shouldn't. And there's a lot of things you get to get away with for a long time that you don't get to at the end of big cycles. Like a lot of things have to get kind of paid for. And so that's probably where we're at, and it probably gets paid for with inflation. And speaking of Warren Pies, the 314 guys did a good analysis with the reconciliation bill showing that to keep the debt to GDP ratio flat, their number was 6.6% nominal GDP. So if you're growing under that, debt to GDP is going to go up, and so you have to eclipse that. That's not an easy bar to get to.
Jeez. Not with that attitude, it's not.
Right. Well, hey, productivity miracle, robots doing everything for us, AI, like, who knows?
Yeah, that seems like a hill to climb.
I think we might be less than a decade away from like a robot being able to do your laundry and stuff at your house for a reasonable price.
Yeah.
I hope, because I don't want to do it anymore. I don't want to do the dishes anymore.
No, I hear you. Only problem is, what is that robot going to cost on an inflation adjusted basis?
You're just going to get a subscription to it, man.
They'll probably put out it'll probably be like $1 million, and you can get on like a 75-year loan. You know what I mean? Like a 75-year term.
I think they're going to be better than that. somebody might be eating the loss, in Silicon Valley or something, but I think you'll be able to subscribe to them for a price that makes it worth it.
It's just, it is so bizarre seeing this setup and seeing what's going on in bonds and then looking over at the market and seeing, this type of action, people bidding up these kinds of stocks, trading at this valuation. We're just like, it just feels like a rug pull moment's coming.
And it is global too. Like yields are flying higher in Europe and Asia, and scary levels in Japan. So but like we talked about with Kevin, it's not so traditionally the last 20, 30 years, one block has been doing a bunch of fiscal and the rest sit back and watch. Well, now all of a sudden the US is doing fiscal, Europe's doing fiscal, China's doing fiscal, Japan's, everyone's doing fiscal, which means everyone's making new bonds that have to get bought. And that's a tough environment.
You need it needs to be
something
a
has to
global
fund
restructuring.
Yeah, it's kind of a liquidity problem.
Well, that does it for us. We got to wrap it up. I got to run. So we will be back again tomorrow. Let's see here. Oh yeah, don't forget to check us out on social media, YouTube. See the video feeds and a little change there. So it's now you can get it at knowyourriskpodcast.com.
Woo!
Yeah, look at that.
That's a big announcement.
Yeah, it's not it saves me some confusion, that's for sure. So anyway, we got to run, but we will see you guys tomorrow. Have a wonderful evening. And you're listening to the Know Your Risk podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.